well, not because I'm feeling lazy, because this has actually gone a little bit longer than I was expecting. The last ones on financing is actually fairly straightforward, so I'm not going to do the T accounts for the liability and the equity accounts that we're looking at. But what we're picking up is debentures and ordinary shares. Have these changed? Debentures has gone from 97 to 83. So the liability has dropped, which means we have paid some of it off. So we've gone from a 97,610 to 84,390. And the difference of that, if you look at the difference to calculate it, is the difference is 13,220. To reduce the liability, you debit liability. If we paid it in cash, we credit cash, that amount. And we're running out of room drastically. And what we end up with is a really big hand anyway, 13,220 as a credit because the cash has gone out of the business. And last, well, not quite last, there's two things we need to do. So we've got 13,220, repayment of borrowings. We look at ordinary shares, and ordinary shares have gone from 156,870 to 157,430. So it's gone up by a really small amount. And that really small amount is 560. So they have issued $560 worth of new shares. Obviously that wouldn't happen in real life. No one, they're not going to have an issuing for that small amount, but this is the ivory tower, so we can do what we like here. So we've got 560, it's gone up. Credit equity, debit cash, because we have $560 come in. We're excluding transaction costs. We're not worried about that sort of thing. We end up with debit cash 560, credit equity 560, which is the ordinary shares. And I know it's a lot of moving, but you guys have the sheet as well. Proceeds from issue of shares is 560. Which leaves us with one more thing to do. Repayment of dividends. And in this case, that's pretty straightforward because dividends declared and paid during the year was 71,280. It was paid, they tell us that. If you look through the liabilities, there are no dividends payable sitting there. There's no declared dividends as a balance sitting there. There's no other dividend account sitting in the balance sheet. That's got to be something which is paid. So 71,280 is the cash outflow that you see. Payment of dividends, 71,280. Overall, cash flow from financing activities gives 83,940. Add these all up, cash has gone up by $200. We started at 100,000, we end up with 100,000. Did you say $100,200? That just sounds wrong, but 100,200, yeah, it just sounds clunky. Anyway, we end up with $100,200. Now technically I should have put, if I can fit it in somewhere, which is unlikely, 71,280, and if you were to add all of these up, take all of these away, that should theoretically add up to a debit balance of $100,200. As long as I've written everything in there properly, which I hope I have. So just a final point on this, and then if there's any questions, feel free. It's just problem solving to an extent. So the way that you do it, and I kind of touched on it with tax, if you're dealing with the tax paid, look to see any information that says anything about tax. Is there a tax payable? Is there DTAs? Is there DTLs? That's going to have an effect. Is there a tax expense item? If you're looking at dividends, is there a dividend payable? Is there declared dividends? Does it tell you how much was paid in dividends? Interest, is there interest Is there interest expense? Is there interest receivable? Is there, what's going on with that? If it's relevant, you need to include it. Because think about it, cash, all of this balances with all of this. We're trying to figure out how this $200 debit came about, which means, and all the rest of it, there has to be $200 net of credits. And what we're trying to do is actually figure out how those affected cash flow, because it's got to somehow, when we add this all up, that's got to work out. When we went through, we dealt with accounts receivable, we dealt with inventory, we dealt with property, plant, and equipment, we dealt with accumulated depreciation, we had the T account for accounts payable, we looked at debentures, we looked at ordinary shares. The one thing we didn't look at specifically was retained earnings, and this is a good double check on dividends. What affects retained earnings, or the change? So we've got opening retained earnings, we've got closing retained earnings. What is the thing which causes a movement in retained earnings? What's it? What happens with net profit? Where does that go? Goes to retained earnings. So that goes into retained earnings. Now, this is for you to do at home, because I think we're nearly done. If we add up retained earnings of $236,000 and we add up the net profit figure here of 117, 236 plus 117 gives you about 350 odd. Is that 350? No. So what is the thing that adjusts retained earnings down? Dividends. And that's a good way to check that you got the dividend number. So we don't even need to tell you what the dividends paid were. You need to have a look through what's going on there. And it's a useful double check in this case. Look through the additional information. We dealt with property, plant, and equipment. We dealt with net profit, just talked about. We dealt with dividends. We dealt with income tax. We dealt with interest expense. We have used everything there, and you need to use everything there. Some of it may not actually have a cash flow effect, but you need to check that it doesn't. You do that, it should all balance out, and away you go. Any questions on that? Yes? Could I repeat what I said to last? I can't remember, it was only 2 seconds ago. What did I say? Retained earnings. Retained earnings, you add profit, well, you add profit if there is a net profit, and you take away dividends, and that will give you your closing retained earnings. So it's a good double check. So coming back to, as a final thing, sorry, laptop. So overall, what information cash flows provide, it is different to income and it is useful. That's the second point. The regulation is predominantly about presentation and disclosure. Management don't have a lot of choice. There is some, but they don't. It's more about how this information is presented to you to use it in an efficient way. On that note, remember there is a revision lecture next week, but if you're not turning up to that, good luck with your exams. Good luck with the weekend. Enjoy the weekend, and hopefully.
Just running the midday class, are you doing a Friday night class as well?
I'll be here Friday night. I'll be here Friday night. So yeah, 6 o'clock to 8 o'clock. I will be. Look, if you haven't turned up if no one is here at 7:30, I will leave. Unless you let me know beforehand, they say I am running late from work and I will be turning up at 7:30. But if I'm here and there is no one here at 7:30, I'm not hanging around for another half an hour. But if there are people here, I'm happy to go at 8 o'clock. So turn up, ask what questions you've got. There are drop-ins later on, so talk to us, ask us questions, say hi. But otherwise, good luck, enjoy the weekend, and I'll see you if I do.